Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FACTSET Research SYSTEMS INC Annual Report. FactSet Research Systems Inc. offers a wide range of businesses and services to the investment community worldwide. These include workstations for financial data analysis, portfolio analytics for portfolio management, enterprise data solutions for large-scale data management, managed services for supporting various workflows, subscription-based financial data, and market intelligence on. Plus securities, plus companies, plus industries, plus people, cloud-based digital solutions for remote access application programming interfaces, APIs, for integration with other systems. These services cater to various types of investment professionals, including institutional asset managers, bankers, wealth managers, hedge funds, and private equity and venture capital professionals. The significant drop in FactSet Research Systems Inc.'s stock price over the past year can be attributed to several key factors. The company's fiscal fourth quarter 2025 earnings report fell short of analyst expectations, with adjusted earnings per share, EPS, coming in at $4.05 compared to the projected $4.13. Furthermore, FactSet issued a weaker-than-expected outlook for fiscal year 2026, projecting lower EPS and revenue than anticipated. The decrease in operating margin, due to rising technology expenses and heightened competition driven by AI developments, also contributed to investor concerns. Additionally, the perceived risk that AI might disrupt FactSet's business model rather than being a growth catalyst further impacted investor sentiment. The prolonged slowdown in the banking sector was another challenge cited as a potential threat to FactSet's growth assumptions. These factors collectively led to a negative market reaction, with the stock experiencing a significant intraday drop following the Q4 2025 earnings release and subsequent decline to a 52-week low of $282 in early October 2025. The primary drivers of revenue growth for the company include its subscription-based model, expansion into new markets, strategic acquisitions, and organic revenue increases. These initiatives have contributed to a 4.4% increase in organic revenues in 2025 compared to 2024. On the other hand, revenue decline is primarily driven by the Asia-Pacific segment's significant decline of -8.5%. Additionally, decreases in accounts receivable and prepaid expenses have also impacted revenue growth negatively. Macroeconomic conditions and industry/market conditions are mentioned as external factors that can impact revenue growth or decline, but they do not appear to be the primary drivers of change in this case. Net income and profit margins. A changing landscape. The financial summary reveals a mixed picture of net income and profit margins. On one hand, net income decreased in two instances due to increased costs from AI investments and foreign currency translation adjustments. However, it increased by 11.2% in 8 other instances, indicating a positive trend. Profit margins also experienced fluctuations. They decreased due to competitive pricing pressures, reduced demand, and increased development costs. Additionally, changes in tax laws, currency exchange rates, and higher operating costs or taxes negatively impacted profit margins. Nevertheless, an increase in operating income and a gain from the divestiture of a business led to an uptick in profit margins. The data suggests that net income and profit margins are influenced by various factors, including investments, market conditions, and regulatory changes. As such, companies must carefully navigate these complexities to maintain profitability. The company is generating a significant amount of positive operating cash flow. For the past 3 fiscal years, the company has consistently shown an increase in net cash provided by operating activities, with figures of $726.3 million in fiscal 2025, $726,260 in fiscal 2024, and $700,338 in fiscal 2023. This trend indicates a stable and growing ability to generate cash from its core operations, providing a solid foundation for the company's financial health. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, the debt level increased to $500 million borrowed under the 2025 term facility as of August 31, 2025, page 36. However, this was followed by a decrease in debt due to repayment of term loans and revolving facilities in 2025, pages 37 and 56. Notably, the current debt decreased from $124,842 in 2024 to $0 in 2025, page 56, indicating a substantial reduction. Additionally, the total debt increased marginally from $1,365,973 to $1,368,260, page 86. In terms of interest expenses, there was a significant decrease from $65,778,000 in 2024 to $56,324,000 in 2025, page 35, and also from $65,412,000 in 2024 to $57,749,000 in 2025, page 89. The change in interest expense decreased by $9,454,000 from 2024 to 2025, page 54. Overall, the company's debt level has seen a mix of increases and decreases, while its interest expenses have significantly decreased. The financial performance of the company's regions varied significantly in the past 3 years. The Americas region was a standout performer, accounting for 65% of total revenues and experiencing steady growth from $1,335 million to $1,506 million between 2023 and 2025. In contrast, Asia-Pacific was the weakest link, with a mere 10% share of total revenues and declining revenue figures from $210 million in 2023 to $235 million in 2025. The EMEA region fell somewhere in between, contributing 25% to total revenues and experiencing relatively stable growth. These regional disparities highlight areas where the company may need to focus its efforts to improve performance and capitalize on emerging opportunities. Management is outlining a comprehensive strategy to drive growth and expansion across the financial services spectrum. The company aims to become a trusted enterprise partner by embedding itself deeper in client workflows through innovation and AI integration. 3 core pillars will guide this effort: expanding data offerings, investing in AI-powered workstation products, and enhancing client engagement. Key initiatives include prioritizing AI integration and natural language processing to accelerate decision-making and drive growth. The company is also focusing on buy-side clients with multi-asset class investment strategies and enterprise-wide solutions. A hybrid cloud strategy will be implemented to benefit from elasticity, resiliency, security, and regionalization. Management expects growth to continue outside the U.S., but notes that adapting efficiently to manage business effectively in non-US markets will be crucial due to differences in laws, regulations, and cultural norms. The company is also taking steps to mitigate risks related to intellectual property rights and global data privacy laws. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In fiscal 2025, the company paid 4 quarterly dividends, increasing the payout from $1.04 to $1.10 per share in the third quarter. Additionally, it repurchased a total of 263,008 shares during the 3 months ended August 31, 2025, with an authorized budget of up to $400 million for share repurchases between September 1, 2025 and September 30, 2026. That concludes the financial summary for FACTSET Research SYSTEMS INC. Feel free to comment below, and I will be happy to answer them when possible.